see the market positioning when you look at the numbers, and this guidance cut is only because the first half has been bad, and that's why there's signs of improvement and in general. So I think this is straight away open in the green and has defended the 200-day moving average. So this could get interesting if it holds today's low of the morning low, then this could well be one of the short covering candidates through the day today. We've seen with some of these names in the past, because the market gets short ahead of numbers. There is a lot of short covering. Apart from that, yes, a couple of others also doing well, like Just Dial. That's an F&O ban, by the way, so you can't short. Century Textile, Sun TV is seeing a bit of a short covering. But really, the two stocks to watch this morning, Glenmark and I think Balkrishna Industries, really is the one which stands out. I mean, I personally thought it would not go down in the morning, and I'm not surprised that actually it's now comfortably in the green. Mitesh, market opening, any thoughts and any individual stock?
So good opening, Anuj. I think I do like the way we kind of got past the 11,880 mark, 890 mark. So I think 11,900, 15, 12,020 should be the next two targets. The stock which I like the most right now, I think I had also covered that in the morning, and Prakash also had a buy there. That's Maruti. I think opened with a gap up and again managed to get past yesterday's high. So that could see good follow through. 74.50 being the first target area. Good chance that 7,600 could also be tested over here. And I think 72.50 now becomes your trailing stop loss.
Right. Okay, gentlemen, thank you very much for joining us and taking us through the pre-opening and the opening trades. You will have to say the market has surprised people on the positive. Yeah. A green start and a stably green start.
Exactly, and now I think really a lot of stocks which are gaining traction, and Balkrishna really is showing signs of what Muthoot did yesterday. I mean, I'm not saying it goes up all the way like that, because in case of Muthoot the numbers were also good, but that's the one which is really one of your stocks of the moment. Manishi Raychaudhuri is now joining us, Asian equity strategist at BNP Paribas. Manishi, hi, good morning. Thanks for joining us. It's been a rather strong going for the market. Do you think we are now fairly valued, overvalued, or do you think this still scope for the index to rally from here on?
So this rally in the Indian market, that's actually come about as a part of kind of a global risk assets rally. We've seen developed markets, we've seen emerging markets rally over past 5 to 6 weeks, and this is as a consequence of a risk-on scenario that's been triggered by global central banks turning more benign, and at the same time investors climbing a wall of worry which had actually been erected as a consequence of the US-China trade war and the possibility of a no-deal Brexit. So those eventualities seem to have receded for now. I think this liquidity-driven rally could continue for some time, but at the same time, given the situation that the Indian macroeconomy or Indian corporate earnings are in, I think over the short term, it does look a bit overvalued, particularly in the sectors which are kind of associated with high-quality names. There's a huge degree of polarization right now between quality and cyclicals. So I think investors in the short term may have to tread a bit cautiously.
Okay. Yeah, I take your point on that. But Mahishi, good morning, Manishi. Are you looking at any green shoots in any of the sectors? Has the earnings growth famine ended?
There are a few. So if I look at consumer staples, for example, we have seen earnings estimates, consensus earnings estimates going up almost about 3 to 4% over past 2 months, and that's been driven by margin expansion. It's not that top line has performed superlatively. It hasn't in almost any sector, but as a consequence of raw material costs coming down, and it looks like this situation is likely to persist for a few quarters more, companies largely have had a margin benefit to their numbers. And I think a few other sectors, even consumer discretionaries or autos and two-wheelers, have reported pretty decent numbers during the festive season. It's not yet captured in the earnings or even in the reported earnings for the quarter. That'll come later in January. But there are these small pockets which seem to be doing well. We also think that Indian IT companies, the frontline IT companies, have reported reasonably good numbers. I think those are some of the green shoots that we've seen from the result season. In fact, this particular result season hasn't been as bad as the past 3 or 4 quarters, but I think that's also partly because the expectations had been beaten down, quite severely by the analyst community.
Manishi, hi, good morning. But I mean, I know you did mention that the autos have done well in the festive season, but don't you think that space is actually flatter to deceive? Because now in the month of November, once again, there's a big slowdown in sales. We just heard it from Rajiv Bajaj. So stocks are rallying, but there's no improvement in demand. How do you tackle that?
Basically, investors would have to be extremely selective in this. If you look at the Indian auto sector, first let's consider the long term, over the next 3, 5 or 7 years. Largely, most of the product segments are still underpenetrated. If we do believe that over the long term per capita income is likely to increase, then for most of the product segments, particularly in the four-wheelers, we can make a case for a long-term earnings expansion. And in particular, the companies which have strong distribution, a strong product suite across different price points, they are the ones which are likely to benefit from this. Now, that said, I mean, India is currently going through a consumption slowdown, and as a consequence of that, almost no sector has been immune to it. So obviously, in the short term, one has to juxtapose this consumption slowdown, which could last for a few more quarters, against this strong rally that you mentioned in the auto stocks. So, from those considerations, we actually don't have any auto stocks in our Asian model portfolio, I mean Indian auto stocks. And, I think investors, they should perhaps wait for a better buying opportunity once the valuations correct a bit.
Okay. Well, Manishi, what's the BNP Paribas global view? Do you expect this pro-risk trade and pro-EM trade to continue? How long?
Now that's a
tough one, yes.
That's a tricky question, because it's of course difficult to predict for how long this would continue. There are certain milestones that we are looking at. For example, we would look at the phase 1 US-China trade deal being signed sometime in December. We would watch out for a relatively smooth transition to Brexit. It now looks like a no-deal Brexit has been avoided. And I would also point out that many of the geopolitical factors which earlier would have had a very severe impact on valuations or even on other variables like oil prices, they have become relatively, or rather they're having relatively muted impact on many of these variables. So, I think, on balance, I mean, this could continue for maybe till the first half of the first quarter of next year, maybe till January to February. And, the variables to watch out for, apart from the ones I mentioned, would also be how the global central banks react to, to the synchronized slowdown that we're seeing. Our point of view is that the Fed would cut 3 times more, so December, March, and June, despite the signals that emanated from the Fed statement, just about a couple of weeks ago. So if these expectations do pan out, as I laid out just now, then, I mean, I think this risk-on scenario could last for a couple of months more, maybe till early next year.
Okay.
Sorry. By the way, ICICI Bank just hit 500, so that's the one which is really, and day before it just gave you that buying opportunity, and after that just stunning. Yesterday also big delivery buying on ICICI Bank, and that's one stock, one bank, by the way, which has no telecom exposure. So
no, actually a lot is going for the banks
yes.
now. I always notice that whenever there is a strong dollar, money moves away from IT for the day, and banks are the beneficiary. A second thing is that one is hoping that today's judgment is going to make life easier in terms of generally stressed assets. And of course, they're the only guys left in the field. There is no one else left to lend.
Exactly.
So, I mean, I think there is a lot going for banks today and for now, I would think.
Exactly. And ICICI Bank really is the one which is leading it now, 1% higher now. Manishi, what about the other big sector, IT? We've had fresh problems for Infosys, but TCS has been just, running up over the last 1 month or so. Large cap IT, any thoughts here?
Right. I think frontline large cap IT is a relatively safe hiding place for investors right now. Number one, it is correlated not so much with the domestic economy, but more with with the U.S. economy or large cap U.S. companies in particular. We are seeing some signs of the order inflows coming back, some signs of order inflows strengthening actually, and the large cap frontline IT companies have proven that they are the ones who are relatively more nimble-footed. They can actually change their business model to sort of capture the new initiatives that most of their clients are engaging in. So that's actually the area that we are focusing on, and in case we do have a significant slippage in the fiscal deficit targets, in case we have more stimuli from the government, there is a possibility that the rupee might depreciate a little in the near term. Even though that goes against the grain of US dollar depreciation that we are generally arguing for. But if the rupee actually does weaken a little, then Indian IT is perhaps one of the best hedges against that.
All right.
Look at the way the Nifty Bank is surging. While, of course, we have been discussing IT, Manishi, there has been a vertical rally in the banking stocks. Now, while we were discussing the frontline corporate banks like ICICI and SBI, Corporation Bank, is there some news that we have missed? It's up 8%. I mean, I know it's a penny stock. It's just about, 17 rupees or something. But nevertheless, a lot of PSU banks are doing well. I don't know if its exposure to SR is big, but it's not just SBI alone. There have been a bunch of banks. Canara Bank is up 5%, PNB is up 4%, Bank of India 4%. So a clutch of PSU banks are also doing well.
It has exposure of around 1,600 crores to SR.
So from their point of view, it's big. I guess the percentage exposures will come up for you. If I remember right, Abhishek had calculated that as well. So maybe we'll be able to guess who's going to benefit most. But look at the